Alright, gather around my financially curious friends, because today we're talking about one of the simplest, safest, and most sleep-easy ways to build wealth, the 3-fund portfolio. Now I know what you're thinking. 3 funds, that sounds like something my accountant uncle talks about while wearing Crocs and sipping room temperature coffee. But hold on, because this strategy might just be the unsung hero of beginning investing. No crypto hype, no meme stock, no squinting at candlestick charts like you're decoding the Matrix. Just 3 boring, reliable index funds. That's it. That's the strategy. And while the rest of the world is out here trying to become day traders after watching one finance TikTok, the people who quietly stack 6, 7, even 8 figures, they're building boring portfolios that win over time. Why? Because the 3-fund portfolio isn't about chasing returns. It's about building actual wealth without losing your hair or your sanity along the way. So if you're a beginner investor who wants a strategy that's simple, low cost, time-tested, and doesn't require you to become the next Warren Buffett by next Thursday, this is your moment. By the end of this video, you'll understand what the 3-fund portfolio is, why it works so well, and how to start building one, even if your current financial knowledge is somewhere between I have a bank account and I thought the S&P 500 was a sunscreen. Let's break it down. Okay, so let's start from the top. What the heck is a 3-fund portfolio, and why is every finance nerd on YouTube talking about it like it's the second coming of index investing? Here's the short version. It's a super simple, low-maintenance investment strategy made up of just 3 index funds. That's right, literally just 3. Not 30, not some complex algorithm only your uncle with a PhD in economics can understand. Just 3 boring, beautiful funds. And the crazy part? This boring little combo quietly beats the pants off of most actively managed portfolios in the long term. So what are these magical 3 funds? The first one is the Total US Stock Market Index Fund. This fund gives you instant ownership of thousands of US companies, from tech giants like Apple and Google to that small cap biscuit company in Ohio that you've never heard of. If it's publicly traded and based in the US, you've probably got a tiny slice of it. It's kind of like owning a piece of the entire American economy. The second one is the Total International Stock Market Index Fund. This one takes things global. Europe, Asia, South America, emerging markets, developing markets, it's all in here. Because let's be real, the US doesn't really have a monopoly on growth, especially not these days. Think Samsung, Nestle, Toyota, all yours with this fund. And the last one is the Total Bond Market Index Fund. This is your portfolio's chill older brother. Bonds are the calm, responsible ones that help balance out the chaos when the stock market decides to throw a tantrum. They don't spike like stocks, but they'll help you sleep at night when things get rough. Together, these 3 funds give you exposure to literally thousands of assets all over the globe. Stocks, bonds, small caps, large caps, US, and international. It's like a financial buffet without the food poisoning. And the beauty of it, you don't have to check it every day. You don't have to rebalance it weekly. You don't need a spreadsheet that looks like it belongs at NASA. It's designed to be set it and forget it, especially when paired with dollar cost averaging. The 3-fund portfolio says, here, just take this. You're already diversified, now go touch some grass. Alright, so now that you know what goes into the 3-fund portfolio, let's talk about why it works. Not just kinda works, but consistently outperforms the portfolios managed by those people in suits making 6 figures and yelling buy into a Bloomberg terminal. Here's the truth that nobody wants to admit. Complicated does not mean better. In fact, most of the time, it means worse. Why? Because when people try to get fancy with investing, they start chasing shiny objects. Meme stocks, crypto pumps, biotech IPOs, hot takes from some guy named MoneyMitch69 on Reddit. And don't get me wrong, those things might work once, but long term, they usually lead straight to emotional decisions, panic selling, and what the hell was I thinking moments. Meanwhile, the boring 3-fund portfolio just keeps chugging along. No drama, no emotional breakdowns, just steady, diversified growth. And here's the best part. The data backs all of this up. Multiple studies have shown that index investing actually beats over 90% of actively managed funds over a 15-year plus period. Why? Because most active managers with all of their research, resources, and resumes can't consistently predict the future. Shocking, I know. Plus, fancy portfolios come with fancy fees. You end up paying for all of the expertise, and all of those fees eat into your returns like termites in a wooden cabin. Meanwhile, with a 3-fund portfolio, you're looking at fees as low as 0.03%. That's basically free. Trust me, you spend more on napkins every year. And let's talk mental bandwidth for a second. With complicated portfolios, you're constantly asking questions like, should I sell this? Is it time to rebalance? What's the FED doing? And why did the stock drop 12% after earnings? With the 3-fund portfolio, you don't have to think about it. You set your allocation, let's say 60% US stocks, 20% international, and 20% bonds, and then automate your investments. That's it. No panic, no guesswork, no chart analyzing while stress eating Cheetos at 1 a.m. And the best part, you still end up crushing most of the market over time. Why? Because literally you're doing the one thing that works. Staying in the game, staying consistent, and not doing anything dumb. Now that you're sold on why 3-fund portfolio is low-key elite, let's actually build one. Don't worry, you won't need a finance degree, a second monitor, or even a calculator. Just a basic brokerage account and a pulse. So here's what you need to do. Step by step, real simple. First things first, pick a brokerage. This is going to be your investing home base. There's a bunch of options like Vanguard, Fidelity, Schwab, or even apps like M1 Finance or SoFi Invest if you want a sleeker interface. As long as you can buy index funds and set up automatic contributions, you're golden. Once you've got your brokerage of choice, let's pick some actual funds. Here's a super common combo. For the US Total Stock Market Index Fund, popular examples include VTSAX, Vanguard, FCKAK, Fidelity, and SWTSX, Schwab, which cover thousands of US companies from Apple to penny stocks. Vanguard and Fidelity also have VXUS and FTHIX, which are great options for the International Stock Market Index Fund, with exposure across Europe, Asia, and many emerging markets, because diversification is sexy. Lastly, for the Bond Market Index, VBTLX, Vanguard, and FXNAX, Fidelity, are perfect for keeping things chill. Now that we know which indexes to invest in, we gotta decide how much of your portfolio goes where. A classic starter mix is something like 60% US stocks, 20% international, and 20% bonds. But if you're younger and a little more risk tolerant, maybe do a 80-20 stocks to bonds. If you're closer to retirement, you might want to flip that ratio. The point is to pick something reasonable and actually stick to it. Finally, we gotta automate this entire process, because that's where the magic really happens. Set up an automatic transfer from your bank account to your brokerage, and assign those amounts to your 3 funds. Boom! Now you're investing on autopilot, and it's like building wealth in your sleep. Except without any weird dreams about your ex investing in Dogecoin. Here's a little bonus step I have for you. Rebalance every once in a while. Let's say stocks go way up, which definitely isn't the case right now, but for the sake of the example, your 60-20-20 mix is starting to look a little bit more like 70-15-15. Every 6 to 12 months, just check in and shift things back to your target allocation. Most brokerages make this ridiculously easy, and some even do it automatically. That's literally it. No hot stock tips, no watching CNNBC until your brain melts. Just 3 funds, 1 simple plan, and decades of quiet, powerful growth. All right. So now that you know how to build a 3-fund portfolio, you might be thinking, okay, but isn't this kind of boring? Yes, it is. Painfully. And that's exactly why it works. Let me explain. See, the investing world is full of noise. You've got TikTok traders yelling about meme stocks, YouTube thumbnails with red arrows, fire emoji, and people screaming imminent recession. And somewhere in between, there's always some crypto bro trying to sell you on a course. But here's the truth. The loudest people are usually the least rich. The real wealthy folks are chilling, quietly investing in broad index funds, sipping their drip coffee, and not trying to 10x their portfolio by Tuesday. Because boring investing is sustainable. It's repeatable, and most importantly, it's stress-free. The 3-fund portfolio doesn't require you to time the market, pick winners, or even check your portfolio every day. Seriously, please don't. You just keep investing, rain or shine, up market or down. And here's the wild part. Study after study has shown that index fund investors beat most active investors over time. Even the pros with fancy suits in Bloomberg terminals struggle to beat the market consistently. But you're over here dollar cost averaging to VTSAX with your pajamas on and still winning. It's like being the tortoise in the Hare story. Everyone else is sprinting around trying to get rich quick while you're just steadily building up real wealth without even breaking a sweat. The best part? You get your time back. No more obsessing over charts, earning reports, or whatever Jim Cramer is yelling about this week. The 3 Fund Portfolio gives you your evenings, weekends, and mental peace, all while your money is compounding quietly in the background. So yeah, it might be boring, but you know what else is boring? Compound interest, financial freedom, retiring early and never worrying about bills again. Me personally, I'll take that kind of boring any day. Now let's tackle that sneaky little mindset shifts that turn this boring plan into a straight up freedom machine. Let's talk about mindset, because you can have the best strategy in the world, but if your brain is still wired like a TikTok trader, you're gonna sabotage yourself faster than you can say to the moon. You see, most people don't fail at investing because they pick the wrong stocks. They fail because they pick the wrong mindset. Let me show you what I mean. When you're investing in a 3-fund portfolio, you are playing the long game. You're not here to double your money overnight. You're here to build freedom over time, slowly, steadily, and boringly. But that takes a mentally strong investor. Someone who doesn't panic sell the first time the market dips. Someone who doesn't throw their plan out the window just because their friend made $400 on Dogecoin. Someone who understands that wealth isn't built in days, it's built in decades. And that's exactly why mindset is everything. You need to start seeing your investments like planting trees. Every month, you're putting a little seed in the ground. And no, it's not going to grow into a money tree overnight. But give it 10, 20, 30 years, you'll have a full-on forest that pays you forever. The people who struggle are the ones who can't wait. They yank the seed out after 3 weeks and say, why hasn't this grown yet? But not you. You're switching to investor mode, which means you don't check your portfolio every day, you don't chase hype, you don't care if the market dips 10 or even 30%, and you keep investing anyway, because your wealth plan is based on math and time, not vibes and FOMO. Just remember this, no one gets rich from perfect timing. They get rich from consistency, and the 3-fund portfolio rewards consistency like nothing else. So when everyone else is flipping coins and praying for green candles, you're calmly stacking wealth with your simple, boring, beautifully effective portfolio. Now let's wrap this all up. If you've made it this far, then congrats, because now you know the investing strategy that literally changed the game for thousands of people every day. No hedge fund required, no crypto roller coasters, and no spreadsheets that look like they came from NASA. Just 3 simple funds, that's it. You've got your total US stock market fund, capturing the growth of American companies from Apple to that one obscure regional bank you've never heard of. You've got your international stock fund, giving you exposure to companies in Europe, Asia, and emerging markets so you don't bet the farm on one country. And you've got your bond fund, your steady, boring friend who shows up on time and keeps your portfolio from having a nervous breakdown every time the stock market sneezes. Put these 3 together and what do you get? Instant diversification, minimum fees, zero stress, and a strategy that worked over decades. But here's the catch. It only works if you actually stick with it. The 3-fund portfolio is not about timing the market. It's about outsmarting Wall Street. It's not about checking your phone every hour to see if you're $3 richer. It's about trusting the process, automating your investments, and letting time and compound interest do all the heavy lifting. So here's my challenge to you. Pick your 3 funds, choose your allocation, automate your contributions, and forget about it for the next 30 years. So if you made it to the end of this video, drop a comment, and don't forget to like, subscribe, and keep investing like a future millionaire.